How's everyone doing today? It's the almost end of the summer. Hope those of you who have taken some holidays are well rested and ready to get back into it. I'm always excited about the end of summer. Maybe I'm a little bit no fun, but I'm excited for everyone to get back to work and start ramping up for Q3 and Q4. All right. So anyways, I think that oh, and actually anyone who is joining as well later, if you guys want the YouTube link, we will actually put this up on YouTube as well. We're recording it. If you want the YouTube link, comment exit below so that we can make sure that Camilla is going to send you the YouTube link to this webinar. Okay, yeah, you know what? It looks like we have 7 people live already, and more are going to join throughout the hour. So let's go ahead and get started. So the topic of our webinar today is talking about exiting a e-commerce brand for 6 or 7 plus figures in cash. And we have my friend Branden Yamada, who is the owner of eCom Exchange and an expert in the space, who's going to chat with us and answer any of your questions as well. And if you have any questions for him for us to discuss, just comment in this post below. All right, so Branden, why don't you please take a few minutes and introduce yourself?
Yeah, I appreciate you guys having me in the group and having me on, Dayu. My name is Branden Yamada. Like you said, I own Ecom Exchange, and basically we buy e-commerce brands, so Shopify brands, Amazon brands. Been doing this for about 5 years now, and kind of seen it all. So basically just here to bring some value to you guys, and tell you about some of the mishaps that happen with store owners, and what you could do to kind of put yourself in a position where you can make 6-7 figure exits, and what buyers like myself are looking for. It's going to be a lot of value packed for you guys. So if you have any questions, make sure you drop them. And if you're catching the replay afterwards, I'll try to put the timestamps in there as well. That way you guys can kind of click to the questions that you want to find the answers to.
All right, sounds great. Sounds great. So anyone who has questions, by the way, comment below. We actually have some questions from a separate chat as well, so I'll make sure to get to them as we get through this. All right, so kind of first question is, you as a buyer, right, would typically look for in a brand? What is the thought process for evaluating and deciding if a brand is a right purchase for someone like you for at least 6 figures?
Well, so every buyer is different. There's a lot of different buyers and a lot of different price ranges and a lot of different platforms. So, e-commerce has a lot of different platforms. You got Shopify, you got Amazon, you got tons of different, platforms, right? I think there are some consistencies with buyers, legitimate buyers. So I think the main things we're looking for brands that are in a strong state. They're generating healthy profits, healthy sales. They're not on a current decline, like their brand is growing year over year. They have nice automation where the business isn't relying on the owner to run a bunch of things. They don't have to run the ads. They don't have to reply to customer service queries. So it's well automated. Is it a real business, or is it a seller operated or owner operated, self-employed kind of business? Something unique. So something that's not selling what everyone else is selling, because no one wants to buy a drop shipping store that's selling the same things that everyone else is, that's going to fizzle off in a few months. So we want something unique, something that's been around for a while. So different people have different tastes. Some people like, brands to be a year old, 2 years old. I personally like brands to be, 3 to 5 years old. The older, the better. And then also having a business that's properly documented. So making sure you have your finances in order, that you have a profit and loss, that you're working with a bookkeeper or accountant. And that's probably the biggest fumble I see most owners making, that disable them from making an exit on their store.
Yeah, no, that sounds great. So I wanted to touch upon some of those points. So first, it was very interesting that you brought up, is it a real business or is it owner operated?
Yeah.
So I'd love to hear a little bit more about that.
Yeah. So you think about, especially in the six-figure range, right? Like when this whole Shopify thing kind of got started and the e-commerce, hype got started, years ago, everyone wanted to get into it. They want to make money. Every business wants to make money. I understand. But you have a lot of, different drop shippers and people following these different strategies. And it's not being operated kind of like a real business. People are trying to think of, well, how can I get my bottom line to be higher this month and this month? And they're not thinking of the big picture. The big picture is your business should be a business that runs without you. A lot of owners who are running Shopify stores, they're doing their own ads. They're running Facebook ads. They know how to manage the ads, and not everyone who buys a business knows how to run ads, especially when you look at like e-commerce buyers. They're buying Amazon stores, or they're buying eBay brands or something like that are just kind of doing it all for them, and they just manage it. And so I think Shopify owners specifically need to really look at getting that stuff automated, whether you're working with the in-house media buyer or agency or whatever. Get things hands off. And there's a really good book on this. It's called Built to Sell. I forgot the author of it, but check out that book if you want to kind of dive more into it, or watch the 10-minute highlight on YouTube that gives you like the main points. But yeah, there's a big difference there in your exit options, having something that's running itself versus you're running the show.
Yeah, that's a great point. I think that I've heard from somewhere before. It's especially when you're starting up your own business, or dropshipping store, your own e-commerce brand, you are probably, well, the owner is probably the most important asset, right? It's all about them. And I think that, I've heard that it's really about how do you change that? How do you shift that so that your brand is the real asset? That's where the real value is, right? Because otherwise, you don't come with a sale. Maybe there's some kind of deals where you do the seller continues to be involved, with the brand itself. But obviously, the more ideal situation is that you have this asset that operates on its own, and that would be very attractive to the buyers as well. Now, you did mention, kind of dropshipping stores, right? Now, what do you kind of consider to be like dropshipping versus, kind of what you consider to be kind of a more of attractive brand?
So I'm not trying to dog the drop shipping model. I think the drop shipping model is great. I think when you say drop shipping these days, we kind of think of like the gurus and the different courses that they pushed out on how to kind of quickly monetize on the Shopify platform by selling trending products and blah, blah, blah. I think that's kind of like the common conception of drop shipping stores. And it's made a lot of people a lot of money. And the model itself is fine. But when you're running a drop shipping store, a Shopify store that's kind of cycling products all the time, it's not really a sellable business. When you look at the factors of what a valuable business is, you want something that's going to last for years. So like, let's say you're trying to sell your Shopify store for 2 times your profits. You're going to hear multiples a lot when it comes to selling your store, because that's the most common valuation method used for e-commerce brands. But let's say you're trying to sell your store for 2 times your yearly profits. Well, is your store even 2 years old? And from the buyer standpoint, it's gonna, let's say I sustain the performance, I just keep the show running. Am I going to get my money back in 2 years? So you need to think of it from the buyer standpoint and try to find a way to make things as consistent and predictable as possible. And if you're cycling products all the time, well, there's obviously a lot of risk to that. And so this is why you need to focus on developing a real brand and have a real consumer base and have something that's unique from all the other competitors that are out there in the same niche.
Yeah, that's a great point. I think that this is not only on the acquisition side, but also just in terms of when we work with our clients and how we see what successful clients kind of do when they just build a sustainable business overall, right? And I think this is kind of like a key point that I want everyone to realize, that like people want to buy sustainable businesses. People want to run sustainable businesses, right? Like that is probably one of the most important goals for any kind of, drop shipping or just brand owner. Like, how do you make it more sustainable? Whether you want to sell it or you just keep it for yourself and run it as cash flow, right? And this is kind of where, I agree with you, Branden. Not knocking on drop shipping at all, right? A lot of our clients kind of started off doing traditional drop shipping, like, drop shipping from AliExpress, CJ drop shipping, not holding any stock. However, that is great for testing. It's great for
Mhm.
testing concepts. It's great for kind of a low risk method of just scaling up, right?
Right.
But the most successful businesses that we see that we work with are the ones that even if they start dropshipping, they figure out how to double down, triple down as soon as possible. How do they take what might just be a generic product? And as you said, that probably acquirers don't want to kind of buy a store that 500 other stores are selling the exact same thing of. And how do you double down on that? And it's not just about like just adding a logo on your website. That's not enough, obviously, right?
Right.
It's about like how do you actually make it notably different, right? How do you make the product actually better? And that's not
Right.
just the branding itself, but it's also just customizing the product, improving the
Mhm.
features, so it literally then is the most unique version, or ideally the best version of the product on the market,
Yeah, and
right?
I'll give you a good example actually. So take for instance, we see a lot of different baby brands, right? Even in the drop shipping area, baby products, baby bags, right? You could take a look at all the drop shipping stores right now that are selling these common baby bags that you see on AliExpress and other drop shipping platforms. And go take a look if you're catching this on the replay or after the stream is over. Take a look at Baby Tula or look at Tula, Tula. They're basically a baby brand and they make baby bags, baby carriers. Take a look at them. They exited their brand for $73 million. So you think about like baby bags, you think, oh, it's a profitable business. Oh, it's $73 million profitable. And it was acquired by a bigger baby brand that also has different brands that sell, baby bags or whatnot. So yeah, the branding is huge, and creating a real business is really important. Just think of the big picture rather than kind of like the short term. How am I going to make an extra 1,000, 10,000, next month kind of mentality.
Yeah, yeah, and actually, I'm gonna drop a YouTube link in the comments. My good friend Jordan Welsh, a lot of you guys know him. He's been a long time client. He's been working with us on a brand for the last, I think, like 2 years or so. And he went through something like 10 rounds of iterations, and it's very much a customized product. We changed everything, we improved everything, and he actually just recently got it sold. So congratulations, my boy
Nice.
Jordan Welch. I believe we're getting drinks to celebrate soon. But let me actually just post this link below. Uh, Jordan actually sent out a YouTube video about his exit
That's awesome.
like 10 days ago. So yeah. So now you mentioned multiples, right?
Hmm.
So now let's kind of get into the nitty gritties. Like multiples, financials are super important. So what are the
Hmm.
things that a buyer or you like really look at or care about in terms of actual numbers?
Hmm. So the first thing, so I talked to a lot of owners throughout the week. And I probably look a little tired right now because this is what I eat, sleep, and breathe. And I probably talked to, I don't know, close to 100, I don't know, at least through email, and then that gets filtered down into calls, and we kind of filter down the process, right? But one of the first things I do, because I'm reaching out to owners who aren't actively selling their business right now, I reach out to owners who don't have it listed on Flippa or listed with a broker or whatnot. The first thing I ask is, hey, would you be open to selling X brand for the right price? We buy e-commerce brands, and I really like this and this about you. And when I hop on that first call, or even in the first email, is some of the first things I'm gonna ask about is this: understanding the brand better, which is looking at the numbers. So one of the things that a common 7-figure or 8-figure brand is always going to have is properly documented financials. We're going to ask for something called the profit loss statement or income statement. That's the big thing that we look at. And we're also going to take a look for bigger brands. We're going to look at the balance sheet or even the cash flow statement. And these are things that you're not going to make on your own. Even if you are an accountant or you're QuickBooks certified or whatever, you want to have someone else kind of signing off on this stuff and keeping up on it for you. Because a lot of owners in the 6-figure range or lower are, you can lie about your financials and you run into issues or whatever with due diligence. So we're going to ask for their profit loss statement. So some of you guys might have heard of what that is. If you don't, you don't know how much money your business is making. And I'm going to tell you right now, these different apps like Order Metrics and whatever, financial tracking apps are not going to cut it. QuickBooks is fine if you have a bookkeeper looking over it, but you need to get on board and at least have a bookkeeper updating your books, at the end of the year or something like that. So we're going to ask for that. Obviously, we want brands that are growing year over year. So most owners, if you guys remember anything from this live stream, try to remember this. The biggest mistake that owners make when trying to sell their brand is trying to sell it at the wrong time. So when owners are making all this money and it's at the peak of their growth, they're not thinking about selling it because everything's fine and dandy. And then usually when brands crash, they run into some catastrophic problem is when they try to sell it and then they can't and they get no money out of it. So think of your profits for the last year, how much that was, times that by 2 to 4, and imagine losing that. So I want you to think about, and that's kind of the general multiple range you're going to see in, the mid, even low 6-figure range up into the low 7-figure range. 2 to 4 is a multiple of your earnings that you've had for the past year. Other factors as well, but you can kind of use that as a guideline for your exit.
Okay, yeah, no, that sounds great. Now, so is there a specific kind of size or range that someone like you, or maybe kind of a sweet spot that you'd be looking for in terms of some of these numbers you just talked about?
Yeah, so there's different buyers at different ranges, right? Me personally, I'm looking for brands that are ideally doing over $1 million in profits per year. So net profit is kind of like a figure everyone knows. When you get to that 7-figure range, you're going to hear terms such as SDE and EBITDA, which is, let's just say, a different form of net profit. But the bottom line is kind of the most significant factor in your valuation. So I'm looking for brands that are doing at least $1 million in EBITDA or larger, but there's still tons of buyers at the lower range. So, brands that are only worth 100,000 or 500,000, you have all sorts of, buyers in different ranges. And the main things that you should keep in mind is think of your business kind of like as a car. Most people are trying to sell their car in good shape. Most people are trying to buy a working, healthy, or not healthy, but good working car with no issues. And most people are trying to sell their businesses when they're not working. Their engine's ripped out, and now someone needs to replace the engine. So try to keep that in mind. Would you buy your business if you saw it for sale and you were a potential investor? Try to think of it from the other person's point of view to kind of get a better perspective, before selling your brand.
Oh, yes. I'm going to ask a little bit more about the timing of selling it, but there was actually one thing that I forgot to comment on, which is you were talking about the financial statements, right?
Yes.
So the P&L statement is obviously so important. And I will be also very honest with you that, a lot of times, like the clients that we work with, they also need to tighten up their kind of finances as well, even just to operate the business. So this is something that's not just for selling your business. Like, guys, like you really got to tighten up your finances, at least have a good understanding of it. And, these kind of Shopify apps, they might get you kind of halfway there. I think that like a lot of Shopify apps, like Be Profit, for example, they are able to give you a snapshot of kind of maybe your daily like operating numbers, but that's really not enough, right? And you also mentioned that sometimes you might look at the cash flow statement and the balance sheet as well. So for everyone here, whether you're planning to sell or not, I highly suggest you guys look up and learn about the 3 income statements, right? So like P&L, cash flow, and the balance sheet. I won't go into too many details here, but it's really important for everyone to at least have a basic understanding of it. Ideally, have an account and kind of build it for yourself as well. And I think that, one of the things that we see that folks tend to miss out on is actually considering the cash flow statement as well, because this is kind of where we see folks get into trouble with cash flow. Like, hey, my business is doing well, but you got to pay for your goods in advance. Like you have payouts from Stripe that take a week. PayPal's holding your funds for like 30 days, right? So just the P&L is not going to be enough. You have to be aware of your cash flow as well. I mean, even just for operating. And the balance sheet starts to get really important when you actually have like debt or when you hold inventory and things like that, because those are assets and those are liabilities, right? So again, this is not going to be a kind of a whole financial exercise. Maybe I'll shoot a video on this in the future, but definitely, guys, look into it, whether you're just operating your business or you plan to sell, because most sellers, most buyers, especially kind of for bigger deals, they're going to look for at least a P&L statement or, probably all 3 of them as you get bigger and bigger. All right, now let's talk about Now let's talk about timing,
Yeah.
right? So, when do you think is kind of like the ideal time to consider selling?
Yeah. And I'll say this, this is kind of one of my favorite quotes is the best time to sell a business or your e-commerce business is usually when you're not thinking about it. And the worst time to sell your e-commerce business is when you are thinking about it. And I already kind of mentioned this, but 95, I would say over the past years that I've done this, probably 95+% of store owners are trying to sell their store at the wrong time. And what's locked into the value of your store kind of becomes irredeemable if you crash it. If it goes from 100,000 in profits per month to 10,000, you're gonna have a really hard time selling your store. There are some people who buy fixer uppers, but they're gonna offer you pennies on the dollar for your business, and that's not the position you want to be in. So when it comes to timing on selling your business, you want to think about it ideally, half a year before. But I understand, a lot of people aren't thinking that far out. But think about it when things are good. You're in a good position and it looks attractive to an investor. Think of if you're an investor and you saw this thriving business, would you want to buy it? That's kind of like the position you want to be in as far as timing. And if you never sold a business before, I highly encourage you to work with a business broker, because selling a business on your own is not as easy as it looks. And please don't use the people in these Facebook groups to try to sell your brand. And just work with a broker, or if you got a business that's big enough, something that I'm looking for, you could work with established buyers that can kind of walk you through the process, who have the reputation. And I was a broker before I started buying brands, and so we walk people through the buying, the selling process all the time. But refer to professionals if you don't know what you're doing, because just like selling a house, you can mess up a lot of things when it comes to selling a house. That's why I usually use a real estate agent or broker. So same concept applies there.
Yeah, it's kind of a little bit ironic actually, because to your point, the best time to sell is when you probably aren't thinking about selling, and also it might be it's potentially when you're most excited about the business as well, right? The your business is probably the most attractive at the same time to you and also to a potential buyer as well,
Yeah.
right? But one of the ways that we see that can be addressed is like, obviously there are potentially a lot of businesses that might fizzle out eventually,
Mm,
right? But this is again kind of going back to like why figuring out a way to build a sustainable brand, generating consistent cash flow that are not kind of like always going up and down. It could be seasonal, I mean that's totally fine, right? But just going down for no reason, that's going to not, I mean it's not going to be good for you, it's not going to be good for a buyer as well, right?
mm.
Now, so that actually kind of related to a question that we just got. All right.
Okay.
So Kunal, um, Dayu, when do you suggest one should start branding? Do you suggest branding a product right away after you get some traction? So I'll answer that one first, because I think that this is probably a little bit more in my wheelhouse.
Yeah.
I'm assuming obviously, Kunal, you mean that okay, maybe you're starting with a generic drop shipping product, right? So first, let me clarify what I think branding means. Branding doesn't just mean you change the package, where you put your logo on something and it's this exact same product underneath it, right? That's part like that's kind of outwards branding, right? But what kind of branding and kind of buyers are really looking for, like they're looking for a brand, like an actual brand. It's not just kind of the exterior look of something. It's not just a standard AliExpress product kind of packaged with your own logo that's the same as 200 other stores selling. So in terms of like the actual brand strategy and like actually improving on the product and making it something your own, right? I definitely suggest that this is something that you do as soon as you gain some traction, right? Partly also because, look, dropshipping is competitive, right? But the good thing is that not a lot of dropshippers are actually thinking about that next step. A lot of dropshippers these days are still kind of thinking about cycling products, just testing products all the time, and having it run out 2 months, but they just keep doing it, right? They don't even have plans to build a sustainable brand or exiting, right? So I would say that as soon as you gain traction, and I probably mean significant traction, right? Maybe your break-even ROAS is 1.5 and you're crushing with 5x ROAS and you're just kind of scaling up, right? Don't just kind of like get lazy and maybe focus on customer service, focus on kind of the standard dropshipping stuff and just scale it up, right? Start focusing on, hey, like let's get customer feedback, right? Let's see what customers like or do not like. Let's start working on packaging. Let's actually start getting feedback on, hey, the customer, they kind of like this product, but these things are kind of crap, this thing could be improved, the battery life could be better. And what start actually working with your supplier or factory and start actually building out these functions so that not only do you end up with a nice looking brand, but it's actually a unique brand. And then in your marketing angle as well, you can actually start portraying that, and you can probably charge a higher price point as well, right? Because you can start highlighting the features that your product has that are better than your average competitor as well. And now, a lot of you might think, oh, this sounds difficult, right? Trust me, it's not that difficult. Well, okay, I will preface that it's not easy, but anything is possible in China, okay? And the most important thing to think about brand improvements, whether you want to build a sustainable brand or creating a more customized brand that's going to be much more attractive for sale, is that you don't have to go from 0 to 100 in one step. Jordan Welsh, for example, we took like 12 steps or something to get there. Every single time we improved one or two things, which we prioritize based on what's actually most important, what's most problematic for the actual customers. And through this process, every single step, it was not that costly. The MO that much, right? It didn't require significant retooling. It didn't require $50,000 each step, but it was like 10 or 12 steps over a 2-year period. And eventually, he kind of came up with we worked together to build a more customized brand. So start as soon as possible, as soon as you have consistent traction, as soon as you validated the idea. Use your profits to fund these improvements. All right. And then do it thoughtfully, though. Do it thoughtfully, do it efficiently. Listen to your customers. Don't just kind of think you want to create a cooler product so it looks more attractive. That's not what it is. Listen to your customers, and at the end of the day, that's going to pay you dividends because customers are going to like it. You're going to get more repeat purchases. You're going to get more, kind of referral purchases, and that just increases your customer LTV, increases your AOV, and that's going to be one of the most important steps to actually building that sustainable brand that is going to be attractive to either for yourself to operate or to actually exit to a buyer. All right, so there is another question. Hey, Josh, how's it going? One of my clients, know my brand and really interested in what a brand my size could do. Now, so I'm a little bit iffy about sharing your product details and brand details publicly, Josh. So I think that this is kind of where and is going to comment with his information if you want to maybe just contact him and kind of see quickly, kind of tell him, some of the high level numbers, obviously, because he does have specific criteria in his in what he's looking for. I'm sure, he'll be able to kind of point you in the right direction as well. Yeah. Now, you're just talking about brokers and what do you think about like using something like Flippa, for example, or these kind of these like platforms?
Yeah. So there's a lot of benefit to platforms. There's a lot of benefit to brokers. There's pros and cons to both. I think for Shopify stores, there's a bit of a gap. So you have a lot of people who run profitable e-commerce, Shopify stores, and they're just not quite big enough for business brokers to take on. And so they're kind of left to fend for themselves. And so they end up on Flippa or Shopify Exchange or something like that. And there's a ton of good resources on Flippa to help people, understand the selling process, and they try to make it as easy as possible. But it's difficult because, for the first part, a lot of owners don't get the timing and the preparation right. So they don't have their financials together. They're trying to sell their store after it's died. That's kind of the first problem. And they list it on Flippa and it doesn't sell. And this is a bunch of wasted time. But Flippa is a really good platform to get in front of a lot of buyers. And there are quality buyers on Flippa at all the different levels. You just have to kind of familiarize yourself with the buying process. And there's good material to read on Flippa, as well as some other typing in, how to sell Shopify store. There's good material out there, but it's tough because if you haven't gone through an exit yet, it's really overwhelming. And so that's why I'd say focus on building a brand that's big enough for a broker to work with. And so I would say a good guideline: get to a point where your brand is making like 7 to 10,000 in net profit per month, and make sure it's at least 2 years old. And I think you could work with some of these brokers, and just understand the process, because learning that process is a 7-8 figure skill. Once you make one exit, usually you'll make a second exit, a third exit. So it's very important that you understand the process well. Flippa is great, but just be aware that you want to look at the main factors that we talked about. Make sure you get your timing down right, and make sure you have your finances together before you list on Flippa. Yeah, so I'd say those are the things to focus on.
Okay, that sounds good. Have another question through chat is, so when selling a brand, how much is legal protection important? So things like patents and trademarks, are they absolutely critical? And maybe it's probably kind of two different questions. Patents and trademarks are a little bit different as well.
So a lot of brands, what I see is like, especially on the lower end, like 6-figure, 7-figure brands, you have like everyone has a trademark on their name, right? They come up with a unique name, they got a trademark on the name. It's like, it's really not that special. When you get into these bigger brands where there's real IP and you have patents on your product, it's something that's really unique. Then it's like patent valuation is a little bit different. That factors into the business valuation. But I would say legal protection in general is very important. So you want to make sure, if you're working with a broker, hopefully they'll be taking care of you properly with that. But if you're selling it on your own, making sure that you have a proper NDA or confidentiality agreement signed ahead of time, and just making sure that the potential buyer you're working with is qualified to purchase your business. So if you're trying to sell a business on your own through one of these platforms, you could always ask for proof of funds. You could always ask them, the potential buyer, if they've acquired a business before, and still kind of filter out a lot of the tire kickers, because there are people on these platforms like Flippa and Shopify Exchange that are just trying to look at your site and understand your unique processes and products and try to duplicate that. So there are people out there like that, or there's scammers out there too. So in general, it's really important. But when you talk about like patents and trademarks, it's good to have. If you have a unique product that has a patent, that's great. It could be very powerful, especially when you're looking at 7 and 8-figure exits. So if you're working with a large exit, like a 7 or 8-figure transaction, you're always going to have a lawyer attached to that anyways, that's checking everything as you're going along, especially in the closing process. So yeah, pretty much it. Nutshell.
So I will say as well that trademarks are so easy to get. Like just get a trademark, at least on your, brand name or product name or whatnot. And so the first step is going to be doing a trademark search. It's super easy to do it. If you find someone else trademarked your brand for the exact same kind of product, you probably should change your brand name anyways, right? So, so first, at the very least, if you're going to be serious about this, search for your brand, see if there's if there's a trademark on it already. Now, the way that trademark works is that it depends on what it's used for, right? If it's used for a completely different industry, then it doesn't matter too much, right? But even as you're testing out, it's completely free to do. Just search for it, make sure that it's available, and then afterwards, like if you do really feel like you're committing to this brand name, it's so easy just to, you could just hire like a trademark attorney. Like they cost, I remember like a couple $100 maybe, like it's really nothing at all, and just get that filed in. There's no reason not to do it if you're serious, whether you're selling or just having that trademark, so that some random competitor is not going to block you with that trademark in the future, right? Patents are going to be a little bit more difficult. A lot of times, like unless you are inventing something extremely different, extremely new, they are going to be a little bit more difficult, especially because, whether or not you're drop shipping, I think that, even a lot of kind of larger brands that develop their own products, they're still kind of based on something that's already kind of existing, right? It's very difficult. And I would even say that it's probably not the best route to just kind of create something that's completely new. I mean, most likely, like if you have some idea, there's probably some version of it in like in Asia already, or in Japan or in Korea already. So yeah, patents are going to be a little bit harder, but trademarks are going to be important no matter what.
Yeah, Dayu, let me add something on to that. Funny
Yeah.
story. Last year, we're looking at a smaller brand to potentially bolt onto one of our other brands. And during the due diligence process, we found out that there was a trademark that a competitor had for their name, and they owned the trademark, and it killed the sale. So it was a small potential 6-figure exit for the brand owner, and we couldn't buy it, which is really unfortunate. So yeah, get your name trademarked if you're serious about your business.
Got it. Yeah, so we had another common question as well is, now obviously the ideal is someone sells at the peak, someone sells with like $1 million in profit and they get 2 million bucks plus, right? Now, what about in those cases where someone does have a brand, maybe they're like, they're not drop shipping custom products, and it's just kind of like on that downturn, right? And they just want to get rid of it, right? They just want to make an exit and move on to the next step, because there's a lot of folks who might want to do something like that. Is there any advice or thoughts you have on kind of dealing with that kind of process as a seller?
Yeah, so you cut out a little bit, but you said for brands that are kind of on this little bit of a downturn that just kind of want to get rid of it, tips on that, right? Okay, here's the rough reality of it, guys, and I deal with this every day and I have for the past 5 years. When you're thinking about selling your brand, when it's on its way down, the chances of you selling that brand are extremely low. And I mean like 90-95%, probably maybe even higher low, especially when it comes to, brands that are doing under like 10,000 in profit. You're going to get a bunch of people who are just going to waste your time. And I've seen tons of people go through this process. They think that because their brand has this email list and because it's done 2 million in revenue for over the past 2 years before, and that they have all these social media channels, that it's going to come up to some 6-figure valuation, and it's not. And there are people who buy these kind of fixer uppers. There are like these strategic buyers, these small, marketing agencies, or people who understand how to do Facebook ads that'll find distressed businesses, but they are very far and few between, and they'll offer you pennies on the dollar for your brand. Usually at that point, it's just not worth the time, because if you sell a brand for $10,000-$20,000 and you got to dump, months of effort into it, just not worth it. So don't try to sell your brand when it's on the downturn. If you're serious about, like, if you had a sizable business that did sizable numbers and you're serious about an exit, get the numbers and the trend back in the right direction. What I personally like to see, if I see a brand that was distressed and it's on its way down, I'll typically say, hey, get this moving the right direction, and let's talk again in 6 months, 12 months later, if you're serious about making an exit on your brand. So that's kind of the ugly reality of it, is a lot of owners just don't make that exit, and they never tap into the value of what they could have, and sell their brand for 6 figures, 7 figures. But that's just how it is.
Yeah, you know what? That's actually a great point you just made, that look, maybe it's in the downturn, but try to make something work, right? Like, try to make something work in the next 6 months to 12 months. There are a lot of different reasons why there might be a downturn. It could be, I mean, right now the economy is slow, right? It could be because of the external market. It could be strategies are changing in terms of marketing. It could be the iOS update, like back in the day, right? We had, for example, like, when the iOS privacy update hit, a lot of folks were pretty hard hit by that. Like, it completely changed the game, right? And a lot of folks recovered because they figured out how to deal with it. They figured out the new strategies that they needed to actually change up their game. So, like, I think that, one key point here is, if you're on a downturn, I suppose you have the choice just to give up, right? It's like, hey, I guess I've done what I everything I could have, and I might as well just sell that for $10,000, right? Because I want to get rid of it, right? I mean, sure, like that, but I mean, as Branden said, like, is that even worth your time at all, right? Whereas, like, we have seen so many situations where our own clients, like, they hit really rough spots, for various reasons along the last couple of years. I mean, COVID, iOS, all these reasons, the Facebook bans, right? There were a lot of reasons why they were hit. And the really successful business owners, they figured it out. Not always, but you can figure it out. And that actually potentially gives you a huge edge as well, because especially as market conditions change, especially as strategies change, if you are able to adapt to that and show that you are successful where your competitors, where your peers are actually struggling, that actually gives you a competitive edge as well. Because, part of the things that you kind of think about, like acquisitions as well, there's some relativity to it, right? Like when the entire market sucks and you're the one that stands out, then you're relatively a lot more attractive, right? Compared to like if everyone's just doing well and you're one of the crowd, right? So that's a great point there. And whether you're selling a business or just trying to continue to run a business, like put in the right effort. If something is not working, don't assume that the brand is not working. First, try out different things, right? It might be something that you're just not doing correctly or you're not catching up with the market. All right, so Glenn, hey, what's up, Glenn? All right, so his question is, could you guys speak a little bit about the value of a private label brand? So specifically a private label brand. So in theory, unless the product is highly customized, anyone could work with the same supplier and obviously smack their own brand on the product. How do products feel like this? Is it possible to get an exclusive agreement with the supplier? So that part I will answer. Is it possible to get an exclusive agreement with the supplier? However, this first part, and I think I would just kind of add a little bit to as well, because we just talked about dropshipping, pure dropshipping. We just talked about like more of a customized, like okay, like this is more of a unique product, unique brand. And Glenn is more asking about that middle ground, right? Okay, this product is maybe from Alibaba already. It exists. Now, what if we just slap a logo on it and it still does very well? How does buyers think about that?
Yeah, it's tough. And this is kind of that middle ground. So let me give you the big picture here, because you kind of have these repeat bigger buyers that have like even these aggregators that have tens or hundreds of thousands in funding to buy these unique brands. And you have other people who have 1 million or two that are using the SBA or other forms. There's definitely different levels to private labeling, right? Just like Dayu said, like there are brands that just kind of slap a logo on it and it does well. And it's like, well, hey, we're selling, this home niche product that other people are obviously selling on Amazon, but we rank higher, or we're selling it on Shopify, but we're doing these figures. And that's cool. Some people will still buy those, that's still a marketable business that there is a buyer base for. But I think where a lot of people stop, and this is again, like from like the drop shipping to private label to unique brands, is developing and evolving that product further so that you can have something truly unique. And so to give you more context, like all these aggregators and big buyers that are looking for these unique brands, there's a huge shortage of them. There's not enough. And as soon as we come across them, we'll fight for them. We'll fight with millions of dollars against each other to buy these brands. And then what you kind of have left are these, private label brands that aren't quite unique, but they have healthy numbers and they still sell. So there is value to them. Valuation wise, it kind of depends on what kind of figures they're doing, how old it is, as well as other factors. But you can use the general range of like that 2 to 4, probably as a general range, depending on how automated it is as well, whether it's SDE or EBITDA. But I would still use that 2 to 4 kind of as a rough range for now. Another thing to think about, just kind of like Dayu mentioned, is with things changing. We had the ads updates and all that stuff. Looking forward, if the economy takes a major shift and it affects your business greatly, your exit options are just kind of going to disappear off the table. It's going to dry up a lot of buyers on the market until, things kind of recover. So that's also another thing to think about. So yes, private label brands definitely marketable, but take it to the next step, because I see tons of brands that have truly unique products and they exit for 10x, 12x to strategic buyers. Multiples can get absolutely crazy. And when you jump from 4 to 10, like it's just millions and millions of dollars in difference. So yeah, I would say keep that in mind. But they're definitely marketable still.
All right, no, that's great. So they're testing my fire alarm, so possibly they're going to be a little bit loud, and I'll try to mute myself, and I'll let you know. But all right, let me actually answer the second part of the question. So is it possible then to get an exclusive agreement with the supplier? So Glenn, yes, technically it is. the thing about Chinese factories is that technically anything is possible if you're doing enough volume, if you're making them enough money. Obviously, if you are doing so much volume that you're literally taking up like 90% of their capacity and you're saying, hey, look, I'm going to take my business elsewhere unless we get an exclusive agreement to sell this product, at least in these certain markets, right? Very unlikely you're going to get that agreement in Asia because they want Asia, most likely they're producing for Asia anyways, but maybe that's probably not your key market anyways. That being said, though, I think that like because the fact that you have to do so much volume for that exclusive agreement to make sense, or most of these times these exclusive agreements come from like you help develop the product, right? And you have some kind of exclusivity like at the start as well. But the fact that you have to do so much volume for that to actually make sense, especially a product that's existing already, it's probably just going to be much faster and much more efficient, cost efficient to just figure out how do you kind of, how do you build a Atomic product and design something that is not completely new, but, new enough, kind of going from the original Blender to BlendJet, for example, right? They actually made like BlendJet made a lot of improvements that now everyone else copies. But like BlendJet, like the original Blender, like 10 years ago was not like BlendJet at all, right? And when you can make these improvements, right? And again, like they don't have to be that complicated, that expensive. You don't have to change the entire board. I mean, for example, so I won't share your product land, but your product is more of an electronic product. The inner workings, like the actual like chipsets and the batteries and things like that, those are things that can probably just stay the same, right? But if you want to change some functionality, you want to change the form factor a little bit, you want to change how some of the feature works, right? That is not starting from scratch. And that will be easier and faster to get to this more of a unique product. And then you can kind of work with the factory and say, okay, look, we want to kind of develop in this direction. This is kind of a unique line for us. Now let's talk about an exclusive agreement there, right? That is very, very different than something that they might be selling like pretty large volume of, and you're trying to get that exclusivity because you want to capture as much volume as possible out of what they're currently making. All right. All right. So Kunal had a question is, do you consider the fact that not every product out there is brandable or customizable, I assume, as well? Correct me if I'm wrong, because in order to make a brand last for years, you need good customer lifetime value and returning customers. But if you're selling something like a bag, let's say, why would people buy again? Well, let me actually just kind of, okay, so let me adjust my point about how you have to like kind of customize a brand, right? I did kind of talk about like, okay, branding is not just the outward appearance, right? I was talking a little bit more customizing the product. Now, there's a possibility also that you have a unique business model, right? There's actually massive business models out there that actually just sell like non-branded products, like Italic, for example, is a big, they specialize in selling unbranded, high quality. I mean, literally, like, their whole strategy is selling unbranded, generic, but high quality products. But I don't know their numbers, but they're well funded. And I'm assuming their LTV is quite high because their customers, like they want to kind of buy from them because maybe they don't care about the brand and they care about the quality of the product itself, right? Or I mean, look, like grocery stores, right? Grocery stores just sell other people's products. Technically speaking, even if you're thinking about like this concept of a general store, right? Now, I don't mean like drop shipping general store. Those are not good, right? I mean, they're fine for testing, but don't try to sell like a drop shipping general store. But if you have kind of more of like a variety store, for example, like Newegg sells a lot of electronics, right? If you have like that kind of business model, that kind of strategy, then sure, like you can sell bags, you can sell like, whatever, but then your business model is actually acting as a platform to sell stuff. I mean, you're kind of like more like an Amazon, for example, or eBay, for example. And obviously, if you can make that take off, that could be huge. I mean, obviously, like Amazon is one of the biggest company. It is the biggest company in the world, I believe, at least in terms of retail, right? But I think that you did actually bring up a good point. LTV. It's all about the LTV, right? Brandon, you just kind of mentioned, hey, sometimes like a brand's going to sell for 10, 12x multiples, right? I'm going to venture a guess that's because they probably have a reason for it, and probably because they have high LTV, right?
Yeah,
Um,
one of the factors
yeah,
for sure.
yeah.
And let me jump in here a little bit because I want to talk about brand equity, right? So one of the brands that we're looking at now, actually, it's a big brand, and it's probably worth probably 6 to 8 million, and it kind of jumps back to the private label versus a truly unique product. And this particular brand, it's got strong numbers, got great growth, all the factors that we want, except it just doesn't have any very much brand equity. Meaning like these products aren't really well branded. Yeah, it has a name. Yeah, they have their trademarks, but it's not really differentiating itself from the other products that are being sold on the platforms that it sells on. And that presents a challenge from a buyer's perspective, because it's like, well, how do we scale that? How do we take that to the next level? If we're just competing on price, if we're winning on price and we're dominating that category, how do we take it to the next level? How do we take it to other markets? How do we dominate Europe? How do we dominate, Canada, Australia, these different markets? And it becomes a problem. So even in your example, like with bags, there's a lot of different ways to kind of differentiate yourself with bags. And if you need inspiration, go take a look at AliExpress and all these sellers that are selling literally the same exact thing, but still how they differentiate themselves. Like in the description, they're like, well, this hinge here is made like this, and the competitors are like this. You could differentiate like that. And then also, what is your product targeted to? Is your bag for moms? Is your bag for disabled veterans? Is your bag for, there's a lot of different ways to kind of brand that and kind of create a community or target avatar kind of, for your brand that will differentiate itself from bagmart.com or something like that. So I think there's always opportunity to integrate branding and make it unique from the competitors.
Yeah, actually, you know what? That actually reminds me of one of my favorite brands as a case study, which is Dollar Shave Club. They disrupted the razor and blade model, right? It's like, they give you a free razor, and they have very cheap subscription-based blades, right? If you actually look into their business, their razor is rebranded. It's a rebranded Korean product. Like, this actually goes against completely, what I was just talking about in terms of customizing products. Like, you can literally buy the exact same product from the generic Korean brand. It looks exactly the same, maybe slightly different colors, without the Dollar Shave Club logo. So they didn't actually even customize the product, right? But they're a perfect example of a very unique business model, because I think most men shave. I would say most men shave, right? And most men go through razors like every single month, right? So they took advantage of that. They took advantage of that subscription model, and they have massive LTV, which means that actually when you have massive LTV like that, it's not just attractive for buyers. It means that you can acquire customers for way more. I mean, I think that there's some analysis, like they're acquiring customers for like $50 or $100 like per customer, right? You think about it, like if you're selling a razor, I mean, razors are like, $20, max, if you kind of buy a set, right? But it's because like when they acquire a customer, they're assuming they're going on the subscription for years or maybe indefinitely, right? So yes, I mean, I would say that like at the end of the day, it does all come down to the numbers, right? There's not going to be a very hard rule in terms of like, what exactly are you selling? Like, how do you actually customize things? It comes down to the numbers. Now, that being said, though, like the reason why I think that you want to be careful with something like drop shipping is that outside of just the pure numbers, like the static numbers in a point of time, there's also kind of like just comparing it to like, I mean, just other comparables, right? Like I'm sure, Brandon, I mean, maybe there was a time when dropshipping stores were super attractive and buyers were maybe more attractive, but maybe buyers got burned and they realized that, hey, like dropshipping stores, they just don't have the longevity that you're looking for. I mean, I don't know if there's kind of a history of that, right? But there must be a reason why, obviously, that buyers do not want to buy dropshipping stores.
Yeah, I mean, there's still a market for drop shipping stores, and I think the primary consumer that are buying these drop shipping stores are people who are trying to get out of the game, right? Like they're everyday workers, or people who are retired, they got a nest egg, or they're professionals who make enough money to have kind of money put aside to buy a drop shipping store that's like 100, 200,000 or something like that. And they want to get into the ecom wave. Like there's a ton of people, like back when I brokered drop shipping stores, and I ran into mostly that kind of avatar, right? Or there's other marketers who, think they can buy a drop shipping store and scale it and everything's going to be peachy. So there is a market for it, but when you look at the serious buyers who have been, buying brands, they bought multiple brands, or have the funding and the experience of making big acquisitions, they know that these drop shipping stores are very risky for the factors that we kind of mentioned, product cycling, competition. It's very easy to duplicate and very to be overtaken. You look at how many people are selling diaper baby bags. If you're selling it from AliExpress, I mean, there's hundreds and hundreds of them. So there's a reason why these big buyers aren't messing with them, but there's still a market for it. And even on Facebook, you'll see people buying and selling drop shipping stores all the time. I just hate to say it, but they're just kind of the lower level players when it comes to buying and selling e-commerce brands.
Yeah, and I also will just kind of clarify is that, when we're talking about drop shipping, we're kind of talking about like traditional drop shipping, right? I mean, like, we have if you hold inventory, uh, like maybe you have some US inventory, but just because you're shipping from China doesn't mean you're drop shipping, right? We actually, most of our clients, they actually just more use this as a 3PL essentially, like as opposed to using ShipBob, like in the US, they use us as a 3PL service, but they invest in tens of thousands of units of their own brand as well, right? Now, let me get your thoughts on this, Branden, because I still feel like generally in the industry from buyers, there's still a little bit of a discount when kind of like buyers think about shipping from China, drop shipping. Like, I just kind of want to get your thoughts on that.
Yeah. So I think there's definitely kind of this stigma behind brands that are doing fulfillment from China versus like stateside. And it kind of stems from this, the changes that kind of happened between China and the US. You got different, like these different sanctions and different, increasing rates. And, we had the whole COVID fiasco happen and shipping from China was like, difficult. And I think it sparked a lot of fear in a lot of conventional buyers. And I think, it still bleeds into now. People want like made in the US and shipped from the US. And I think the bigger picture that owners need to look at is, a lot of these brands, I'll look at tons of 6 and even low 7-figure brands that have their one demographic down really well. Like they got the US market down really well, and like 95% or 90% of their profits come from the US. And that's great. And they haven't tapped into all these other countries, Australia, the EU, Japan, all these other countries. And being an omni-channel business that's selling in multiple countries is going to fetch a higher valuation, higher multiple than a business that's only selling in the US for a lot of different buyers. There are some buyers who just prefer to buy, businesses that are focused on the US or whatnot. But when you're doing fulfillment from China as well, and you don't have to pick one or the other, you could fulfill from China and you could fulfill from, the stateside. But if you're able to, kind of grow the brand internationally, that's going to put you in a much more powerful position to scale as well as exit, because ultimately your bottom line is the strongest factor in your valuation. So if you're making more bottom line by expanding, internationally, that's going to be better than you trying to squeeze out a couple percentage for your bottom line in the US. So I think people just need to get over the stigma and focus on the big picture when it comes to fulfillment and fulfilling from China.
Yeah, that's a great point, actually. And guys who are shipping from China, through us even, I'm gonna try to actually. I've been talking to a lot of big buyers, big buyer networks as well, and trying to kind of just get them to realize that shipping from China is not a negative thing. Now, probably everyone knows here, and probably most of you have bad experiences shipping from China. It could be bad, right? But it could be good. And I think that, as you're kind of thinking about how you might position your messaging when you're kind of like, kind of selling your store, and maybe you only fulfill from China or you fulfill partly from China, right? Um, that as a negative immediately. Don't be kind of afraid to talk about it, but you got to kind of talk about it. Like, what are the positives of that? And there's so many positives. Just the other day, actually, I actually had a meeting with a very big, like kind of portfolio brands who acquires a lot of brands. And I was like, hey, you want to know they only specialize in US fulfillment because that's that's what they're kind of tied to. And I was like, hey, you know what, the easiest way to like double your revenue, go international and ship from China. And they're like, hey, you know what, I think we might actually consider it, so look, the thing is, like, a lot of times, like on the acquisition side, no, like kind of, no diss on you, Brandon, but like the pure like on the acquisition side, like the pure operations of it, there's going to be a little bit less expertise in terms of like actually kind of operating and thinking about like fulfillment options, for example, the nitty gritties of it. And, you're not going to want that risk, right? You're not going to necessarily want to take that risk in something that you don't have too much experience, you've heard a lot of bad things about, where you had bad experiences in, right? So as a seller, even if you're fulfilling from China, it's going to be up to you to have the right points. Like, hey, look, because we can fulfill from China, we access 30 more countries, right? 40% of our revenue is from outside the US at cheaper shipping options. Like it's even cheaper to ship to these countries than, to the US. So there you go. Like you're going to buy a business that already is international when a lot of e-commerce brands are trying to go international right now. I mean, that's just one example, right? So anyways, in the future, I'll probably kind of create some content around it. How do you frame the fact that you have in the right way for a buyer, so it's not just you're trying to convince them, hey, China fulfillment is fine, but really you're talking about the actual benefits in terms of numbers and finances, why this is actually just an attractive brand in general. And it just happens that fulfilling from China is just one aspect of your supply chain, right? All right, so Brandon, we are on time right now. Well, we're a bit over time, so appreciate that, Brandon. Is there anything kind of like any kind of last words, or any kind of materials that you might be able to kind of share for the group as well?
Yeah, I was supposed to mention this earlier, but when you're talking about kind of the, understanding the different financial, statements, your income statement, balance sheet, cash flow statement, there's actually some good resources. I know you mentioned you might, do some content on it, but you can go over to CFI, Corporate Finance Institute, and Wall Street Prep. They have free courses on that, and it'll take you step through step on how to read and understand a profit loss, balance sheet, cash flow statement. And I promise you, you take a day just to go through that, you'll be ahead of 95% of the business owners out there. So you could really level up and put yourself in a more powerful position as a business owner. Another thing I'll just kind of throw out there for you guys. I know I answered a couple questions, but what I could do, if you guys are interested in potentially exiting your brand at some point, I do have a guide that I made. It's called the Website Exit Guide, and it kind of breaks down the core points and the core factors of what makes a marketable brand and the things that you want to focus on if you want to sell your business. So I can send that over if you want to comment down below, whatever Dayu says to comment. Be happy to hand that over to you guys. And if you have any other questions, if you're catching this on the replay, drop them in the comments and I'll try to answer them the best I can as well. And my content, I'm always talking about buying and selling e-commerce brands. So yeah, pretty much that's pretty much it. I
Yeah,
appreciate you
sure.
guys
Yes.
having me.
Yeah, it's great having you. So everyone, if you want to get this guide or materials that Brendan was talking about, just comment exit below. Exit below on this Facebook post. If you're coming here from YouTube, we'll link the Facebook Live link to below. So please come to our EcommOps Facebook group so that you can make sure you get the guide as well. All right. All right. Well, thank you, Brandon. It's been a pleasure. And again, everyone, if you have more questions, you can kind of comment in this thread as well. And it's been a pleasure to have you, Brandon. We'll definitely stay in touch and hope to have you around again.
Yeah, thanks for having me on, guys.
All right. Have a good one. Thank you.